Today's top story is your home value may be rising, but equity erosion could be quietly shrinking your wealth. But you don't want me to explain it with this face of mine? Let's go to the video.
This analysis comes to you from Real Estate Rank IQ. So your home's value might be rising, but could you actually be losing wealth? There's this sneaky thing called equity erosion, and it might be quietly shrinking your net worth.
All right, let's look at the numbers. On the surface, things look okay, right? In July, the median list price for homes went up by 0.5% compared to last year. A gain is a gain, or is it? Well, hold on a second.
Because here's the catch. During that exact same time, inflation jumped up 2.7%. And that difference, that gap between how much your house is worth and how much everything else costs, that right there is the whole ball game. So what does that gap actually mean for you? It's simple, really. When your home's value isn't keeping up with inflation, your real, actual wealth is shrinking. Your purchasing power took a 2.2% hit. Yeah, the number on your home's appraisal looks bigger, but those dollars just don't stretch as far as they used to. This whole dynamic, it has a name, and it's called equity erosion. Let's break down what it is. So what is it? Equity erosion is just a term for when your home's value goes up slower than inflation. That's it. Your online estimate might look great, showing you more dollars, but what you can actually buy with those dollars? Yeah, that's a completely different story.
You know, Hannah Jones over at Realtor.com put it perfectly. She said, "Your house may still be worth more dollars than before, but those dollars buy less in the broader economy." Think about that. That extra equity you have, it's not buying as many 2x4s for that deck you want to build, and it's not covering as much of a down payment on another property.
And get this isn't the first time we've seen this movie. If you go back to the 1980s, during that whole stagflation mess, home prices went up about 6%. Sounds pretty good, right? But inflation was a crazy 13.5%. So real housing wealth actually went down. What we're seeing today is kind of like a mini version of that.
Okay, so why should you care about this, especially if you're not planning on selling anytime soon? Let's get into it. See this gap right here between home prices and inflation? That's not just a number on a chart. That's your wealth, your purchasing power, just leaking away. It's the difference between what your online statement says and what your money can actually get you in the real world. I mean, really think about it. You go to take out a HELOC, but that money buys you way less than it would have last year. Your budget for that new kitchen, it gets eaten alive by the soaring costs of materials and labor. Or maybe you're thinking about downsizing. Well, the profit you make from selling your big house suddenly doesn't go as far when you're buying that next smaller place at today's inflated prices. And you can see this pressure playing out right now in the market. In June, for every 100 homes that were newly listed, 21 of them got pulled right back off. 21! So why is that happening? It's because sellers are in a tough spot. Their expectations are clashing with reality. They're looking at offers and thinking, this feels too low, even if it's technically more than they paid, so they just wait.
Okay, enough theory. How do you figure this out for your own house? Well, there's a super simple two-step way to calculate your real housing wealth.
Okay, you ready? Step 1. Figure out your home's nominal value change. Just get a good estimate of what it's worth now and see what percentage it's gone up from a year ago. Step 2. Subtract the current inflation rate. For July, that was 2.7%. So let's say your home's value went up 1.2%. You subtract 2.7% and, oof, your real change is actually negative 1.5%. See how that works?
All right, now that you know the number, what do you do about it? Let's talk action plans. First up, for all you homeowners out there.
Okay, number 1, stress test your plans. Don't just look at the dollar amounts. Look at what those dollars can actually buy. 2, be smart about renovations. Focus on the ones that give you the biggest bang for your buck. Think HVAC, roof, the essentials. 3, trim your costs. Shop around for better home insurance. Maybe even challenge your property tax assessment. And finally, and this one's huge, if you have a low-rate mortgage, hold on to that thing for dear life. It's your best friend in an inflationary environment.
Okay, what if you're on the other side of the fence? What if you're looking to buy? Here's what you need to know. Right now, sellers are feeling the squeeze, which means you've got leverage. Push for closing credits. Ask for a rate buy-down. But here's the key. Focus on the total monthly payment, not just the sticker price. A 1% difference in your interest rate can completely wipe out any price cut you negotiated. And of course, do your homework on location. There are still pockets of real value out there, especially in some of those Midwest metros. Look, at the end of the day, seeing big numbers on paper feels good. It's seductive. But real wealth, the kind that actually helps you hit your financial goals, is what truly matters. So you've got to ask yourself a different question. Not just, what's my house worth, but what can my house do for me? For a crystal clear answer tailored to your specific zip code, you got to get a quick equity erosion checkup from Real Estate Rank IQ. It'll give you the hard data to help you decide if it's time to refinance, renovate, hold, or sell, all based on real dollars, not just wishful thinking.